Welcome to the Morningstar Manager Checkup, where we start with the Woodford Equity Income Fund. Neil Woodford is one of the UK's most preeminent fund managers who started this boutique just over 3 years ago. His approach is best described as high conviction, long-term and contrarian in nature, combining his macro views with bottom-up stock selection. It's unconstrained against his benchmark and managed with a total return mindset. The objective being to grow capital and income with a keen eye on capital preservation. There's a greater tilt further down the market cap scale than what we've seen from Woodford in the past, but it's here that he believes he can deliver the highest returns in the context of a low growth environment. In our view, we also commend the firm's regular communication, competitive fees and transparency, and the fund retains its Morningstar Analyst rating of silver. Next, it's onto the continent through the Threadneedle European Fund, which David Dudding's managed since 2008. His investment philosophy has stayed the same throughout, targeting firms with pricing power and high barriers to entry. This results in a concentrated portfolio of sturdy growth companies such as L'Oreal and Unilever. There's large latitude to deviate from the index, and when his quality growth styles are out of favour, such as last year, the fund will underperform. But given the preference for established franchise companies with low levels of debt, we believe that over the long term, it bodes well for an attractive risk-adjusted return profile with lower volatility than peers. We've therefore maintained the Morningstar Analyst rating of bronze. Finally, we have the JPM US Equity Income Fund. A version of this has existed for American investors since 2004, with the UK-domiciled Mirror launched nearly 10 years ago. Claire Hart's been at the helm since inception and is backed by a large research team. The approach aims to deliver a combination of capital growth and income by investing in firms with consistent earnings, high returns on invested capital, durable franchises and strong management. Peers in the category tend to have a more pronounced value tilt. What we generally see for this fund is stronger earnings growth and higher return on equity. So it will likely lag in sharp rallies, but there's less downside volatility than peers. We believe investors are well served here, and we've reaffirmed the Morningstar Analyst rating of silver.